We had some pretty big and exciting news hitting the stock market, crypto market, bond market, the energy prices, you name it, coming out today in the early afternoon hours, and you can see the change that it made. I'm going to cover that in this video, as well as the technicals for what we should be watching through stocks and crypto, through some of my favorite cryptos that are out there and what it means going forward from here. And will we see those new all-time highs in June? Got our fingers crossed. By the way, I'm putting out this analysis over at the Discord where I'm the expert of the week. There's a whole panel of us, a whole team of us over there waiting for you, along with thousands of community members. Down in the description, click the link for that Discord. Use code word doctor when you sign up and check out what's going on over at the party zone. So let's pop this charts up here for you. We'll talk about some of that news. We'll kick things off with QQQ. There we are. Look at this. Kind of had a rough day, a rough start. So you can see the low wick that we had here that we opened up down below the 5 and the 13 that I've been talking about. If you've been watching my channel, I've been talking about those as very critical to watch and see where we go next. And I said it's a time to be careful and not overly bearish given this recent weakness that we've seen. And if we go down to the 10-minute chart, there we go, we'll reset the view. And we'll take a look at this. You can see the sort of day that we had, and then it kind of V'd off. So we had kind of a double peak in here, especially if we go down to the minute chart, you can see it even better. There we are. And we'll drop out some of these technicals, such as the VWAP here. There you go. So here's early morning, what it looked like, that we had that rapid rise and then this massive sell-off. And then we see this just rip going straight up through here as we had Iran strike at a military base in Qatar. And well, there were 6 missiles, didn't quite go so well. None of them landed, which thank goodness that none of them landed. And now, mind you, I don't want to see any conflict happen whatsoever, but we'll say that this is the best outcome that we could have had for that US base in Qatar, the fact that everybody remained safe for it. And well, what does this do, being that it's seen as a failed attack? Well, that whole Strait of Hormuz, that I think about 25% of the world's oil passes through that strait, is thought to be kind of tough to close down, which means that the energy prices, which were spiking because there could potentially be a pinch on the supply side for oil, now that pinch is not necessarily seen to be there, which means that inflation doesn't have as much pressure up on it. Plus, we have the Fed talking about cutting rates, and well, you saw the V shape that we had coming out of that. So this was a confluence of best case scenarios coming out of this. Now, some other evidence that we could look at, if we look at UCO, for example, there we go. This is energy prices. This is the ProShares Ultra Bloomberg crude oil. So we have 2x the performance of what we would have. And if we look at the same exact timestamp at 12:37 p.m. Eastern time, this is that move that you see, which is opposite of what we saw with the Qs. This is energy prices for WTI crude. This is the 2x leveraged version of it. You can see them absolutely plummet, fall off the face of the earth, having a bit of a rough day, down about 11% to close the day. So we can actually watch that a little bit in terms of what sort of catalyst we get. Should the Strait of Hormuz actually close, or should Iran actually, the sentiment being changed to say, hey, they actually do have a dog in this fight. They're probably hanging in there. But right now, while it's perceived, at least by the markets, that Iran doesn't have much of a fighting chance at this point in time, the market is rallying. When we look at equities, energy prices coming down, the Fed might cut rates sooner is also one of those narratives that's also helping us out. And like I said, this does reduce those inflationary pressures. And you can even look at things such as the CME Fed Watch tool and click across the months, and you can see the impact that today has had between the Fed coming out and talking about potential rate cuts as soon as July, along with, like I said, this attack going the way that it did so far. Now we can still have the markets rattled if that sentiment does happen to change. We'll say it that way, that they do have a dog in this fight, which hopefully not, because that means that this thing continues. I wanted to stop, but this is a finance channel, so we'll talk about the financial side of things here. And well, so for the markets, if inflation is thought to be not so big of a problem, and if energy prices aren't going to spike up for us, then we can continue our upward trajectory, which is what the technicals are currently suggesting. So we're going to go back to QQQ. Oh, that's not it. Let's try it again. Too many Qs. One more time. Boom. Winner, winner, chicken dinner. I will never, ever, ever complain. I went to a 111-minute chart. That was weird. In any case, we're up above the 5 and the 13, which means we're back up trying to fight this area of chop. The RSI looking absolutely wonderful and ripe, sitting at about 60 as of today's close to 61 on the weekly chart, 59.57 on the monthly chart, 68.69. So out of that overbought territory. But once again, when you look at this monthly chart, look at that selling pressure that we had before. But when we had that selling pressure in the past, we were actually up in the overbought territory. So we had an RSI of 74, we had an RSI of 75, and then for this last one, the RSI 70.48. So we actually have a slightly cooler RSI on a monthly basis when we look at the Qs. So new all-time highs, could they happen? Well, it is a very strong sign that we saw the prices recover the way that they did. We just need that good news to continue from where we're at right now. So moving over to the SPY, once again, the 5 did not cross the 13. We got a nice candle, a whole rocket ship back up above from the lows that we had as that news happened to turn around. Unfortunately, things like TMF kind of suffered today with the turnaround of that news. So it wasn't just the energy prices. We also had bond prices falling. And just in case you're wondering if there's some connection, some correlation between the stock prices, the energy prices, and what we have for things like TMF, which is the bond prices, well, we'll just go down to the minute chart. And guess what happens when we look at 1237, so that's right there, 1237. We were actually doing all right. Look at that uptrend that we had. Then we started getting big red candles at that 1237 hour, and we can just go across, and you guys can look. I'll take down VWAP again here. You can look and see what happened throughout the rest of the day. The fact that we had that sell-off in those bond prices means an increase in bond yields, which means that people are moving back to that risk side, away from that safety side, given the other evidence that we have. So if we look at things like the US 10-year yield, for example, what you're going to see today, if we go out to the daily chart on this, there we are. That 10-year yield that we have up here, I'll hide the technicals for a moment. You can see that long bottom wick that we actually had some depressed prices, some depressed value for the yield, and then it recovered a bit as the risk assets started to recover. And now is actually a good time to talk about IWM, and then I'm going to go from IWM, which tracks the Russell 2000 small caps, into crypto, and we got outperformance for IWM, risk asset, risk on. That was the sentiment today that we took on. And then we also have crypto, which started off not so great for the day, but strongly recovered. And wait until you see those charts for that as well. Guys, I'm going to share further technicals out over at the Discord. I told you before about it. The link is down in the description. Code word DOCTOR will save you 50% off your first month sign up when you sign up for the earner tier, which gets you unrestricted access to everything that's available to the community. Like I said, there's thousands of members over there already taking advantage of what the experts have to say. I'm one of those panelists that's over there. But then we also have the bread bot, which contains where those big moves are happening up or down for your favorite plays. We also have AI tools and then advanced charting tools that you can also take advantage of, and also an Ask the Expert channel, plus live trading, which I've been featured with Stockmo a couple times in that. I can't wait to do the next round of it. So guys, what are you waiting for? Check it out. Down in the description, code word DOCTOR. Let us support you in your journey towards financial freedom and showing you how to build alpha in your portfolios. Also, if you want to learn this technical analysis yourself, and if you want to learn how to trade options like I trade options, there's coursework through Stockmo Academy. Stockmo is a personal friend of mine, and we've been friends for the past 17 years. Both very passionate about finance. For him, his background is in finance and he moved over to education. I'm in the inverse of that. I started in education and then I started moving into finance. And I'll tell you what, I vetted the courses that he's made over there and they are absolutely astounding and incredible from an educational standpoint and a financial standpoint. And they can pay back in dividends what you pay out to join them if you put that knowledge and information to use effectively. I'll tell you what, they are rock solid. Code word DOCTOR is going to work for those as well. Go ahead and sign up for that. Use the bundle plus the code word DOCTOR, and that's going to save you the most. Guys, let's get into IWM and crypto, and then we'll wrap things up for you. So for IWM, outperforming today what we had for the NASDAQ 100 and the S&P 500 and the Dow Jones, up about 1.25%. And I talked about this inverse head and shoulders. And then there's that bottle rocket that we had there staying up above the 50 EMA. Now, mind you, IWM has its work cut out for us. It might be the biggest mover when things are good. We'll say it can tend to outperform under the right circumstances. It still has an uphill battle. We're still down below the 200-day. The EMAs we're well positioned. But then these SMAs on here, check out that bounce off support on the 20-day, moving strongly up towards the 200. This inverse head and shoulders that I have drawn out for you could play out yet, giving us a very, very strong move, about 15% up from its current price. There we go. There's that inverse head and shoulders that you can see. And if I move this down, you can see that price target up there at 248 based off the inverse head and shoulders. Getting on top that 200-day is going to be the first sign of what we need in order to get there. So if we keep up economic strength and we get easier monetary policy, those can both be votes in favor of the small caps starting to outperform, starting to make that strong move back up from where they're at right now. We should absolutely keep an eye on IWM. Moving into crypto, Bitcoin, check this out. Look at that support. We have a nice long wick here from yesterday. Today, catching on to that support as we closed above it. And like I said, the risk assets really strongly moving up. Touch the 0.5 Fibonacci extension level that's on here. This is very critical for us that we got there. The next move is to sit on top of it, but it's not isolated to just Bitcoin. If we go to Ethereum, you see that touch on support that's down here right about 1211, well, I should say 2110. So $2,100-ish is where we had that support. So the low here is 2115, and I had that at 2112 to 2113. Once again, there's that rocket ship that we got. Now, mind you, Ethereum has a little bit to go because it's not above its 200-day EMA or SMA, so it has to get up above those. The EMA is right here in blue, and if I put the SMAs up there for you, the simple moving averages, we're down below the 20 in blue, and then the 50 that's in magenta, and then that orange, which is that 200-day. Down below all of them is a bearish sign. So Ethereum has a lot to do to not only revert to the mean of the 20-day, but then to also get back up on top all of those moving averages. The sooner, the better, so that we can hit that golden cross moment. So keep your eyes on the risk assets. XRP, check this out. When you look at XRP, look at these long wicks that you got, and that coincides with the support area and the other buying pressure that we've seen that comes in right as we get south of that area. You can see the previous couple times back here, massive green wick on that one, a bottom wick on there showing that big buying pressure coming in. And we got it again so far. Once again, we're not out of the woods with this stuff yet, but this is a good sign right now. It is a good vote in the favor of further bullishness for the crypto market. Solana, look at that. We didn't quite make it down the support area, but we are getting rejected so far at resistance, right at about 143. We're down below the 20-day, the 50-day, and the 200. This is currently bearish, but like I said, with that buying pressure coming in, that push back towards the risk assets, if we move further into a risk-on scenario, we'll see those moving average crosses that we need to see in order to indicate further bullishness. Now, we have one more that I'd like to cover, and that's SUI. And for this one, up about 10% as recorded. Look at that touch on support right down here at about $2.29 is about where we got that low. So nice strong bottom wick off of that, and then moving back up today. Like I said, as we lean back towards those risk assets, once again, if the whole Israel-Iran conflict and the U.S. involvement in this ends up being something short-lived and doesn't negatively impact energy prices and allows inflation to remain subdued, we could have, with low inflation, also helps out for the economic strength that we have. It could lead to higher GDP because of easier monetary policy. The labor market is that last part in that recipe. So if we have continued strength in the labor market as well, we could be party on, like I said, throughout the rest of 2025. When I say like I said, I mean in my previous videos, I talked about this. If we don't see in June those higher highs happening, I should say those all-time highs happening, I do think that we have them in the stock market and in the crypto market before the end of 2025. The question then is when, and I'm really looking forward to those labor market reports that we get. And guys, come on over and join us over at the Discord so you can see more of my analyses, my buys and sells. I also have a best penny stocks to buy now that I'm going to be updating as well. So if you'd like to see those before they hit YouTube, make sure that you check those out. You got to use the earner tier. You got to use code word doctor. And then when you sign up for those courses, code word doctor, you got to remember that bundling the courses with that code word is going to save you the most. Thank you for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.